Happy Saturday, everybody. I hope you guys are having a great weekend. Now, national listings are exploding right now, and we have Mike Simonson saying inventory could grow by 40%. Now, we're going to look at Nashville's data, and I'm going to show you why Nashville may be bucking the trend, maybe, but there's some underlying things that I think are very important to consider, because you may be feeling like this is a major buyer's market, or you may be feeling like this is a major seller's market. It really depends on where you are, and not just location, but price band. But first, I got a comment on my last video. What do you mean by expect 3% at closing? Now, guys, when you are buying, I said if you're buying $1 million house, you should expect to close at 970. If you're buying a $500,000 house, you should expect to close at 485. That's just a general across the board. If the house has been on the market for any amount of time, you should be closing at a 3% discount. Now, that's not just me talking. That's not just like, look at how good of a negotiator I am. Guys, let me show you some data here. Okay, so this is every single house in Williamson County over the past 2 weeks that have closed. Okay. And the days on market, this x-axis is the days on market it's been on the market. Okay. Here's what I want you to see. This line right here, this is no discount. Everything that closed along this line was no discount. But what I want you to see is just how many of these listings closed at below list price. And we're talking about in the first 10 days. It's almost, I'm just looking at it. It looks like the majority, if not half. If you go to day 0, look how many, even on day 0, got 2.5%, 3.7% discount, 1% discount. There's still discounts to list price, even on the houses listed on day 0 went under contract. But the bottom line is, guys, if your agent is telling you you need to offer list for a house that's been sitting on the market for more than a weekend and not under contract, they're leaving money on the table for you guys. Every one of these that closed at list, I think, left money on the table. Look at this, minus 3.8, minus 2.5, minus 4.9, minus 2.2, 1.1, minus 1.1. You can see 7, look at 10 to 20 days. 7 of these closed below list price, only 4 closed at list price, and 1 above in 10 to 20 day window. That seems to be more than half tend to close below list price. If you're not closing below list price, you're probably leaving money on the table. Now, one other thing I want to show you here before we get to these national headlines, because I want to clarify this as well. It's not that I don't think you should buy in King's Chapel. It's that I don't think you should be buying some of what's for sale, especially in a downtrend. You want to be buying on the lower end of the downtrend. So you want to be incredibly careful. And I had a buyer, we talked about it, and I was like, yeah, but that's a good deal. You can see these color codes right here: new, to be built, renovated, existing. I'm going to just filter out everything but existing and new. Okay. And look at this house. Let me zoom in a little bit so you can see it. Sold for $376 a foot, MLS 259-3327. Let's just pull it up. Okay. So you can see this one sold for $377 a foot. Now, it was extremely high. It was built in 2020. So it's a fairly new house, probably still on the edge of its warranty for some things. And you can see, you come down here and you can actually see that it sold in 2022. It sold for $1,675, guys. It sold for $1,675. So whoever bought this bought it for $75,000 less than someone bought it in June of 2022. Now, you may be thinking, oh man, they're a winner. And they are, in the sense that, zero price appreciation in 2 years. But when you look at what they paid for, there were 2 other new builds that closed this year, January and February, that closed for 10 and 20% lower price per square foot than this house right here. So even though they got they got $75,000 less, they are still overpaying for this house when you plot it against all these other houses. Now, look down here. Here's an existing home that sold for $255 a foot. They bought in the floor of the neighborhood. Now, I can tell you that this house is likely dated. It's not the prettiest house in the neighborhood, but guess what? They bought in a neighborhood where houses are going for $400 a foot, and they paid $255 a foot. And they paid on the floor. Look, only one house in the past almost 2.5 years closed lower than what they paid for this house. Do I think they won? Yes. If you're buying a house in that neighborhood and you bought it for $250 a foot, I think that's not bad. You're getting a major discount to what's happening in the neighborhood. And even if prices drop, how much more are they going to drop? And you're not going to fall nearly as much as some of the people that bought up here at $415, $400 a foot. So just keep that in mind. It's because I see a downtrend. It doesn't mean don't buy in that neighborhood. It just means buy low in the neighborhood. Typically, you can, in a neighborhood like Ladd Park right now, I think there's huge opportunity in Ladd Park. Ladd Park is struggling big time. Okay. But again, if you can buy at $250 a foot in Ladd Park, I would do that, guys. I think that's a win. Now, could prices drop further? Could we have this massive home price correction? Sure, we could. But if you're buying at $250 a foot in Ladd Park, then you're already buying almost 30% down from where prices peaked a year and a half ago. So, and I certainly, my base case, the dollar's always going to depreciate. Assets in general are always going to go up over the long run. And so the fact that we've already had a price correction, the fact that, a Ladd Park house has already dropped almost 30% from peak, that tells me if you can buy closer to 250, Ladd Park's a great place to buy. And that's what I'd be pushing for. Some of these houses that are like 279 and 280, I would just be like, buy it at 250 a foot, offer 10, 20% less and just start the conversation. Because I guarantee you, these people are wanting somebody to start a conversation with them. And that's what I wanted you to see. Okay, so Redfin reported that new listings rose to the highest level in 17 months in February. Okay, the new listing explosion that we love talking about. You can see it here. And I like this. This puts it in perspective. 2023 was absolutely abysmal when it came to new listings. Let me move my guy here. Man, we're starting to see new listings. Now, even as that is happening, Mike Simonson's talking about inventory could grow 40% this year. Okay, 40% growth in inventory is huge. But what's happening in Nashville? Okay, so active listings in Nashville are actually going up. There is a little bit of problem with this, even though year over year they are going up. Let's take a look at single family homes just over time. In the spring, listings start building. They build and build and build until the fall. And then at the fall, active listings peak, and then they tank at the end of the year. We are now looking at 5,228 active listings versus last year where it was about 5,100. So it's just up just a hair. But here's the problem, guys. Here's what I want you to see. If we look at under 1 million active listings, this is as of yesterday, so it did pop up a little bit from this. But if we look at under 1 million active listings, guys, we're year over year down. Okay. And one thing that's really interesting to note is just how steep this went from 5,000 listings in the middle of November all the way down to 4,000 listings where we are today. Now, you got to ask yourself, why did it drop so much in Nashville? And why is it not recovering like other areas? I did talk to a developer. Actually, we emailed back and forth quite a bit. And one of the things he mentioned was that he had dozens of townhouses that he built and he was selling them. But the lower price bands dried up so much that he just decided to take them off the market and rent. A lot of listings that were active, instead of selling, they're now being flipped to rent. Now, obviously, in theory, that would put downward pressure on rental prices. We're seeing that in apartments. We're seeing that less in townhomes and single family, but could we start seeing it in townhomes and single family? It would be very interesting to see. But look at over 1 million active listings. Okay, over 1 million active listings are up 20% from last year. Okay, almost all of the year over year build can be accounted for by the over 1 million active listings. This is a problem because even though you guys think, oh, maybe listings are going to build, and believe me, I want them to build. I want prices to tank. Okay, that's just where I'm at. It's not that I want home sellers to lose, but I want prices to tank. The problem is we're getting active listings building in a price range that virtually no average buyer can afford it. The median home price is in the middle of 400. It's 480 right now. It's going to be probably 485. It's going back up to 500. Nobody can afford this right now. Now look at Davidson County though. Okay, Davidson County is breaking out with active listings. You can see that the listing is bumping up. If we continue to see that accelerated bump up, Davidson County active listings could just explode. And I think that's something to really watch because no other county is doing this. Guys, no other county active listings aren't doing this, just Davidson County. Now, Davidson County is the biggest one. And look at this though. Active listings in Davidson County in March, it was 314 last year for 1 million plus listings. It's now at 452. And there's a lot of demand for it, guys. I hate to say it, but the $1 million home sales have been very healthy thus far. Now, it may not feel like that because you may be feeling like If you're a seller, you're like, well, it's taking longer for me to sell my $1 million house. Or if you're a builder, you're like, there's just so many out there, so many options. But the fact is that the demand has been growing for $1 million houses. Based on my conversations and anecdotally, the demand for lower priced houses is actually going down. And I do believe this is one of the drivers for why prices are going up. Now, this is something I said we would watch, and that is price cuts. Okay. In single family homes, look for price cuts. Now, the normal range, according to Housing Wire, this is Mike Simonson, this is Altos Research, this is a fantastic chart, but the normal range is between 30 and 35%. So where is Nashville? Is Nashville getting more price cuts? The answer is no. Okay. Last year, we had more price cuts and we had fewer active listings. And let me say that again. Last year, Greater Nashville for single family homes, we had more price cuts. We had 1,573 price cuts when we only had 5,021 active listings. Today, we had 1,496 price cuts and we have 5,228 in active listings. So our active listings are up and our count of price cuts are down. Thus, we only have 29% of our active listings that are actually cutting their price versus last year when it was ranging it was right on the bottom of the 30s. So we're actually very, very tight on inventory, especially in the affordable range, just like I showed you before. There are fewer price cuts this year than there were last year. And there are pockets that are very hot, unfortunately. And that's leading our prices to actually go up. So if you're looking at median price and you're wondering, well, where are prices headed now? The answer is they're headed up for now, okay? We are still, looks like we're hitting a ceiling. Our median contract right now is at 500,000. We could close out March close to 490. And given the tightness of this market and the trend, unless mortgage rates continue to creep up well into the sevens, I think we could get back up to our previous high. We could get close to 500,000. The market is just that hot right now, guys. It's just that hot. And people that can't afford the market are stepping out. And that, unfortunately, that mix change is also pushing up the price. But it's not just mix, guys. If we look at price per square foot, we can see the price per square foot is heading up right now. Median price per square foot at $238. We peaked last year at $240. So we're about to break through that $240 mark. And you can see the trend of contracts. It is headed up. So I do expect prices to keep going up. But the bottom line is, guys, the best thing you can do for yourselves, especially if you're buying, is to have an agent that's willing to ask for discounts for the houses that are listed, especially if they've been on the market for more than a few days. Just ask, guys, just ask. People want conversations for their houses. Even in a hot market, people always want offers. They always want conversations. If they're offended by you putting in an offer, especially if you back it up with data, if you're being respectful, you back it up with data, but you're still asking for 10 or 20% and they're offended by that, then chances are it's probably not a good conversation to have anyway. Like, it doesn't sound like people are really working towards an agreement. But I have found the vast majority of sellers, the vast majority of agents appreciate data-driven conversations. Even if they disagree, even if you're too far away on price, at least you have a floor for your house. You now have a price floor on your house, and you can go around and tell people you have an offer. I don't think that's generally a good thing. But a smart, savvy list agent will want offers and will want conversations just because they can go around and say they have an offer on the house that they're considering, which can, put pressure on people to act if they're going to act. So bottom line is, though, you should ask for discounts in this market. Even if it's hot, you should be asking and expect 3%. I hope you guys have a great weekend. Thanks for watching.